Okay, guys, welcome back to episode 12. So I'm just going to continue on from our trend lines and just touch into our chart patterns. So, of course, you've got the standard chart patterns like, double tops, double bottoms, and the typical retail chart pattern. So, like you can see here, euro price forms a high. We then fail to take that high and we drop. You can see here again, price forms two lows, fail to take the low and we rally. But where I'm talking about chart patterns, I'm talking more. Let's have a look at some structure just to find a few good examples. So even for example, Aussie dollar here. So for me, chart patterns tie in with structure, tie in with trend lines. They're all a continuation from themselves to continue on and on and on to increase the probability. So let's just have a look at it like this. So for me, you see Aussie dollar here. We've also got what I'd call this descending channel, which is obviously a chart pattern as well, or a falling wedge. There's obviously many names. They vary slightly, but they're all basically the same thing. Like I said before, if you're in a downtrend, if you have a downwards pattern, you're gonna more often than not have a reversal to the upside. The way we go through that is by once we have a price gets back above that previous support and resistance, we're then looking for a price to rally. You then see again price pulls back, forms, if you want, another kind of bearish flag, another, obviously this is just a corrective pattern. So price has rallied up, we're starting to see some sort of the highs are getting lower but the bottom's kind of staying in. Then it's also like a falling pattern as well. Then you see price rallies up higher again, come back down into this region here. You can also obviously draw the trend line, or like I just said, connect the two again. Then you see a falling pattern, price rallies up. So if it's a falling pattern, more often than not, price is gonna rally up. So if it's an example, so any sort of downwards pattern or bearish pattern in a bearish market usually will lead to a reversal. And any, obviously, if you see a bullish pattern in a bullish market, it leads to a reversal. So what you should be seeing is healthy pullbacks. So now once we broke out here, we're now in a bullish market. What we should be seeing is bearish patterns. So we're seeing a bearish pattern because we're in a bullish market. Just looking for a few more examples. So you'll see even when you look through price, when price is trending up or price is trending down. For example, here on US dollar CAD, this was another trade that I highlighted before. You can see price gets very thin. So again, showing you another downwards pattern in a downtrend. Then you see price snaps and breaks higher. Upon breaking higher, what do we see now? Which like my 4-hour chart, upon breaking higher, we've got this corrective structure. So in the form of a channel, we're in a bullish environment. We've pulled back bearish, and what does that lead to? Another bullish continuation. So that breakout here, once we break out, we should see price rally back up. You see, we just fell short. Even here again, in terms of chart patterns, another falling pattern. Then what do you see? Price breaks higher. Then we see how structure shifts. So this is the characteristics of price going in with chart patterns. So you see here, bearish pattern, bullish break, bearish pattern, bullish break, bearish pattern, bullish break. Then we have what we identify as a ranged environment. So if we say here, that's your ranged environment. Price is failing to move up. Inside that now, this is what I would call corrective structure. So while price is redistributing, so we're going from buyers to sellers. So you can see, you got to look at price like this. While we was going, so when we're going up, so this is how I always want to look at price. When we're in a bullish market, you might as well say 70% are long, 30% are short. That's the natural pattern you need for our up thrust. So you see here, once we broke out here, I'm talking about from this point of price up until that point of price here. So from here up until here, that's what I'm talking about. 70% of people are long, 30% of people are short. That's why we're having standard pullbacks, but we just keep going long. When we get to this point in price, it's now become 50-50. So you have to understand that people that were long, they're now not as long as they were. Does that make sense? So you have to understand what I mean by that. People now are less bullish. So that's what's created that sideways, because now the short people are now more bearish. So if we're less bullish and more bearish, that's what creates that range. Then when we have that breakout, you can see now we've gone 70% short and we're 30% bearish. And then it's going to obviously be the red side. So then you're seeing that breakout. So what do we have here? We have that sideways pattern. Then once we break out, this is your key. That's your key here. We've broken out from that area. We've broken out from that price area here. So we've broken out from that area right here. So that's your indication of markets are potentially changing direction now. Sellers are taking control of this market. So we're looking at price right there. That's the shift. So the way that we trade is we're looking for that return. We're looking for that return back. So we don't know how high that return is going to be. We can use obviously varies of technical analysis like I've just been going over these series to let you understand where's the most highest probability area. So if we have a look, you can see CAD comes right back into basically the retest of that range and then we break. But then let's zoom in. So how do we take advantage of this price action? So we see redistribution here. Price goes from long to less long, then turns into bearish on this breakout. So if we dive down into a 1 hour price action, we'll be able to see more examples. So here we basically have a 1 hour version of what happened. So we're identifying this level right here. So that's the level that we'd be looking at. We have again another form of consolidation. So we basically got another form of consolidation. So we already showed some rejection and we've got another form of consolidation in the highs, failing to go higher. The higher lows are coming, so it's leading to a breakout. We break to the downside, add another more chart patterns in. What do we get? So I'm just building on everything I showed you. So from here up into here, what do we get? Price is supported, supported. We snap below and we rally straight back down to the origins. So we come right back down into where that bullish kind of ran started from. We play around here. We can't close above this region. So when you look back in our 4 hour, this is more likely going to be a wick, which is why I say to myself 4 hours the time frame that I look at. So in that candle, that first rejection off, we didn't close above this level. So as long as price didn't close above there, we're not going to see a prolonged pullback. We then get our setup show itself again in the form of this A, B, C. So from that high down, we've got our A, we've got our B. You can see on this occasion, I would have most likely gone short around 61.8 or 66, but we came up to 70.4, price reversed. You look again, same scenario playing out again. We've got our low right here. We get our corrective structure in forms of this chart pattern here. We break. You see what price does again, breaks out, attempts a retest, collapses. We then get another bounce. You see price basically do the exact same thing again. So price is not random, like I keep saying, price is not random. All it is that the markets, so if we look at it like this, all it is the markets are going to do the same thing, just in a different manner. So you see here, we've got support. We break below. We shouldn't have broken below, sorry. We then retest again. Same exact thing I'm showing you. Then retest that previous area. We get the drop right back down. So when you're looking at the characteristics of CAD right now, you can see it's just falling off a cliff, because then every form of corrective structure is being sold off. So as we're now starting to sell off so aggressively, So I'll say from here 70-30, then it's going 80-20, 90-10 now. We're not really getting any pullbacks in the market. Another example of some chart patterns. Obviously, you can look at this as a double top. US dollar, yen, even US dollar, yen. You see the exact thing again. So this is a great example of different market phases with a market pattern as well. You see UJ right here. Price is doing what? Bullish market, consolidation. So let's just change that to orange so you understand. Bullish market in this run up right here. So leading back to what I said, 80% long, 70% long, 30% bullish. Then what do we see? Upon markets get, say, here, you get that break. So that's the shift. Right there for me is the shift, which is why I leave it there. So that's where we've gone bullish, bearish, and now we're going bullish consolidation, and now we're looking at a bearish. So this is what for me is chart patterns. Like I said, I don't follow typical retail in terms of standard double top, double bottoms. These are the patterns, these are the signs that you need to learn in the market. These are the chart patterns that matter. So also here you can see UJ started to get what? A bit of consolidation. So let's look right here. We've got an area that we can't break through on that side. We've got area here. So we've got another pattern. This pattern here. So we've got a sideways pattern. So it's showing you price is now failing to go lower, failing to go higher. The lows hold in, and what happens? Price breaks above. Like I said, once we get above this area here, you're looking for longs. You see price try to manipulate almost all the way back down into that region, but it couldn't quite make it. And then we see price continue up. See price fail to close above this area on all of those attempts here. And then we get to see the downside push. So chart patterns have to tie in with the structure. They're all parts of the same thing. And that's why the way that I obviously teach you guys how to trade, or I'm teaching you guys how to trade, is to not trade like everyone else. That's why everybody else loses. You have to look at the charts for what they are. The raw imprint of price, the raw price patterns, and then be able to understand them and then be able to utilize them for your financial gain. So I'm going to move into the next episode. I'm going to move into understanding my FMG fib. I'm going to break this whole fib down for you and let you know why I've come up with the fib levels that I've got plotted. So I hope you enjoyed this episode. Thanks for watching.